Following the presentation of the mid-term monetary policy presented by the Reserve Bank of Zimbabwe Governor Dr. John Mangudya, Zim Sentinel received the following comments from citizens.
Well, one has to be surprised at the shallow measures that came from the Reserve Bank's monetary policy statement, in the sense that you'll struggle to find any policy direction supportive of industrialization, which I think is the key. We continue to see an appetite to address issues of that are symptomatic rather than the fundamentals. And in any case, the Reserve Bank here has set the cat out of the bag, in the sense that now people understand that they are so-called RTGS or bond or crypto, whatever you call it, according to the Reserve Bank governor, is not equal to the US dollar. The claim is that it's at parity, but the message that the people of Zimbabwe are getting is that clearly there's a big difference, and people are going to shun this local currency that's just been created by announcement. And that's what that's how the markets behave. They listen to the message. They don't take the claims, and they'll react accordingly. So you are likely to see runaway exchange rates of the so-called RTGS and the US dollar. And principally, people want the US dollar. There's no two doubts about it. So to say that we don't trade with the US dollar, with the US, and therefore we should adopt the rand and stuff like that, it's not going to sink to anyone, because people are interested in the preservation of value. And money is about confidence. The more people have confidence in a certain currency, the stronger it becomes. It becomes a store of value. So it's basic economics. In fact, it's 101. And then what we got from the Minister of Finance is even worse, in the sense that the minister is concerned about infrastructure projects, and he says he wants to crowd in private sector, yet he's actually encouraging government to go out there and issue infrastructure bonds, which basically are also going to mop up money, and in that process of mopping up money, are essentially crowding out the private sector. So we need local resource mobilization, and I don't think that the government here, through the fiscal measures that were announced by Professor Mtuli Ncube, are concerned with primarily raising money for government. I mean, the tax that he announced is atrocious. It's going to kill people. It's too high. Why does he need that money? He's not supposed to be expanding government revenue. He's supposed to be trimming that government expenditure down, not to go out there and continue to raise. He says he wants to widen the tax base. We're already tax burdened, because the individual tax is at 45%, plus VAT at some 15%, plus this, plus that. Before you know it, you're already giving government some 70-something% of your total income, and that's unacceptable.
Tawanda Karombo, a freelance business journalist, said,
the monetary policy comes at a time when the economy has been struggling or continues to struggle, and we foresee it continuing to struggle. But looking at the monetary policy, there are some positive developments and announcements, which then have to be followed up by action, and have to be backed up by further policy measures. If you look, for example, at the separation of foreign currency accounts, that is, which are accounts that are earning forex, that is, their payments into those accounts is money coming from outside the country, which is now separated from bank accounts that are earning RTGS. It's a positive move in that companies have been struggling to raise forex. They've had to queue at the central bank to have their foreign payments processed. So now they are able to access their forex, and now they are able to use their forex for imports of raw materials, for payments of plant equipment and machinery, etc., which has been a major constraint to production. And then you also look at new taxes, such as this one was announced by the finance minister, the one on mobile money and electronic or digital transactions, which has essentially been raised from a flat 5 cents fee to 2 cents per each dollar. It will have an impact on people who are sending money to their friends and relatives through mobile money, but it's also a source of income for the government, and that mobile money has become the predominant way of transacting. So the government is broke, and if you look at the bigger picture, that they are using treasury bills to fund their operations. So any additional revenue they can get, I think, although it is painful for the ordinary people, it will work for mopping up revenues for the government. Other issues include asking foreigners to pay for goods in forex, which I think was being abused. Even at the border posts, people were paying duty on behalf of foreigners using local currency. So they're just trying to mop up additional revenue. But by and large, we are still in deep water, and we still need more policy measures. The bond note is still here with us. We still need to address it, although I think we are now moving to abolish it through the separation of the foreign currency accounts and the RTGS accounts.
Clarice Maduk, Director of Platform for Youth Development, said,
my understanding of the monetary policy is based on what the expectations of the Zimbabweans were. In fact, there's been a big challenge in terms of especially the exchange rates. I think as Zimbabweans, one of the biggest ones that we had to do with the monies that we had in the bank versus the money that was used for trading. Like, for example, there were 3 rates that you would get when you are buying. Like, you'll be charged a separate figure if you are buying in Zimbabwean bonds, or when you are buying in US dollars, or when you are buying using RTGS. So there was a great expectation when we were listening to the monetary policy to say, how would the Reserve Bank governor address that? Because I think that has been the biggest problem. We also realized that some people were making brisk business by either burning US dollars, that would make the US dollars into RTGS or into bonds. So at the end of the day, it means foreigners who are coming to Zimbabwe, or those with access to foreign currency, would have a lot of advantages over the poor Zimbabweans, the general majority, like some of us. So that is the base to which I'm making this comment. So when he announced that there will be separation of bank accounts, we have one bank account for the FCA, that is for foreign currency, and the other, the Nostro, the general bank account that would be receiving the bond notes or so forth. So for me, I think it does 2 things, because what it does, that now it is easy to then say this is a separate account that deals with foreign currency, so that at least those with foreign currency will not being disadvantaged, or those those who were making business out of selling money on the streets would not make business. But even as they have done that, what it simply means to me is that there is now they've confirmed that Zimbabwean dollar, which is bond, and US dollar or RTGS are separate. They've got separate values. But all along we've been meant to believe that bond and US dollar were almost like 1:1. So what the monetary policy has done is to confirm that they are different in terms of the value, which is the truth, that the Zimbabwean dollar cannot be the same with the US dollar. But I think even as they have announced, I have a worry as a commoner, as a Zimbabwean, that what has been making it difficult for the money to get its real value has been the lack of transparency in terms of how much money is printed and who is selling US dollars in the streets. The Reserve Bank governor need to deal with that kind of root cause, to say even when they've announced is the implementation now. Are they going to enforce what they have announced? Because we have seen these mandatory policies, from the previous governors. There was Gideon Gono, etc. What would happen is that what they announce, the following morning, no one respects them. And they come again with the raft measures where they are kind of firefighting. But the firefighting is because there is a lack of discipline also from the government side in terms of their expenditure. Also because there are other players who are linked to either to the governor or linked to the government or linked to politicians who sell money. They get the money from the banks. So I think I feel that what they have to do, what the governor has to do, is to ensure that at least he gets support from the politicians, the political will, who have to ensure that those who sell money, those who trade money, do not have access to the banks, and then the banks respect these police pronouncements. Because I think from the mandatory policy, we have been told that by mid-October, around the 20th of October, all banks should have complied, like those who have one account. Like I think most of the people who also receive money from the diaspora or so forth, they have only one account. Sometimes they receive money in US dollars, and that money is the same with one who have been, when it is transferred from their salaries, which can be sometimes in bond notes and so that confusion needs a lot of attention. I think the Reserve Governor needs to ensure that there is political will from the government to ensure that what they've announced, the banks comply and everyone else comply. So that is my feeling. But the real challenge that Zimbabweans have is that we were beginning to have inflation. Prices were beginning to rise because of the speculation around the value of money, especially the Zimbabwean dollar. The bond note was continuously going down and down and down and down. And if that is not addressed, the mandatory policy will merely be a police pronouncement that is not being respected, and then we'll have them coming again perhaps before Christmas, announcing another thing. That has been the trend. So my response is that we need political will, we need all stakeholders that are involved to comply, so that whatever has been announced is implemented. Otherwise it will just be a mere waste of time, and the challenge continues where those who have access to US dollars, access to politicians, continues to thrive. Well, it is the majority and the poor, where we belong, continues to suffer.